In money matters, the markets are holding steady at midday trade after closing in the green yesterday. Trade is thin in the United States as markets there are closed for the July 4 holiday. Investors are seeking clarity on future interest rate hikes and will eye minutes from the latest Federal Open Market Committee meeting later this week. Mbuso Zulu is the Senior Equity Analyst at Sentio Capital, and she joins us now for the latest market moves. Thank you very much, Mazulu, for your time this afternoon. Let's start with an overview of how the local trade is faring.
Afternoon, Tituzile. Yes, trade is a little thin, as you were saying, just because of the U.S. holiday. But we generally expect those volumes from the U.S. to show up in the afternoon, but we expect that that won't be the case today. The JSE is slightly higher, trading about 0.14% higher today. The sectors that are driving that, the all share higher are the domestic stocks, being the food producers, AVI, Tiger Brands are trading higher, as well as Pepco on the retail side. And you've got the resources trading a little bit lower. You've got Exxaro and BHP Billiton lower today.
So oil prices held steady early today. What's driving sentiment there?
Yeah, you've had Saudi Arabia come out with comments that they will continue into August with that 1 million barrels per day of cuts, and Russia as well also adding and saying that they will also cut 500,000 barrels a day of oil. So this is going to move global oil into somwhat on balance to a slight deficit from the oversupplied position that you had in the first half of the year. So you should see a balance of supply towards the second half of the year, and this may boost prices. But the concern and why you haven't really seen oil prices rebound that much is because of the concern around global demand, risks of recession or slowdown in other economies. The U.S. is still holding up pretty well, but just concerns predominantly around China, which markets were looking for to come back and bring and pop up global growth. But that looks a bit shaky at the moment.
Sure. Food and Logistics Group, RCL Foods, has flagged a drop in profit in its next annual results. Help us make sense of that update.
Sure, they are guiding that earnings will be lower by at least 30% on the results that were reported in the prior period. There are a multitude of factors that are leading to this outcome, partially as a result of the levy that has been raised by the South African Sugar Association. That's as a result of Tonga Tullet being put into business rescue, and from Tonga's side, them no longer paying the contributions that they pay to the South African Sugar Association. So that has needed to be taken up by the other sugar producers, such as RCL. They are still continuing to experience the significant load shedding costs. They had said that they had experienced 95 million rand additional cost as a result of load shedding. And this is continuing as well to be a negative effect on the results. And then finally, they still have not fully recovered the feed costs in the chicken business in Rainbow Chicken. And the market, especially on the chicken side, with consumer demand being lower as a result of consumer pressure, retailers as well as food manufacturers are in effect subsidizing the price of chicken at the shops. So that is leading to a negative effect on their profitability.
Let's talk about H&M and its local journey since opening its first shop in 2015. They now have more than 30 outlets. Track the journey for us and how the brand has been received locally.
Sure, yes. They came to South Africa very excited. We were very excited as consumers in 2015. Opened their first store in the V&A in Cape Town. And I would say that the rollout has been relatively measured. They had looked at launching in South Africa as a gateway into the rest of Africa. But that coincided with a time when the rest of the local clothing retailers were pulling back on the rest of Africa operations. And so you haven't seen H&M open any stores outside of South Africa on the African continent. Their store rollout has also been relatively measured. Only 30 stores in the space of time. I would say that shows you that they've been pretty measured with the store rollouts, looking at demand patterns in the country, as well as the growth dynamics, consumer disposable incomes, etc. Looking at the unlisted players such as H&M as well as Zara, they've moved from about 3% market shares in South Africa back in 2015 to about 9%. So they are still smaller in the pie, in the overall pie. And they have experienced growth definitely, but at this point in time, with consumer being under so much pressure, you've seen from the listed apparel retailers that consumers have been using a lot of credit to access sales and to access merchandise, and this offering isn't available at H&M. So they would rely more on cash sales as well as from consumers with higher disposable incomes. They have also opened an online store in the country, and this is on it's on a third party. They are not really doing fulfillment themselves, and this is also another avenue that they are doing fulfillment. Apologies, but the app is on a third party app, and this is a way for them to also access the consumer outside of normal trading hours.
Speaking of connecting with the consumer, is it a missed opportunity that they're not expanding into the rest of the continent?
I think what the local retailers found is that, it's not a one-for-one in terms of a replication of the consumer, the operating environment. So you do need to be a bit more innovative in the way that you are thinking about your rest of Africa strategy. Pepco has done it with the most success. And H&M being a global player, they would definitely have better skills, capability to be able to do it. But looking at the size of the stores that they roll out, they're pretty large stores. You don't really have that sort of the malls in that mall culture in the rest of the continent as you have in South Africa. So I would say that it is correct of them to be measured with rolling out into the rest of Africa. You need to be relatively nimble, such as how Pepco does it. Have smaller stores, be able to get your stock in store, and also Pep doesn't have a high fashion element to it. So the product can come in and stay in country for quite a period, whereas H&M is a bit more fashion, it slants a bit more towards fashion relative to others. So I would say, yes, they still need to maybe read the landscape a little bit and come to market with something that is outside of the traditional way of doing apparel that they do in the other countries that they are in.
Fair enough. Thank you very much for your time this afternoon. Mbuso Zulu is a senior equity analyst at Sentio Capital.